What is going on YouTube? It's Sankey and we're back with another one. Alright guys, so it's turning out to be a historic week in the stock market and our Patreon Discord group has been absolutely blowing up all day as plays such as GameStop, BlackBerry, Nokia, AMC have been exploding due to the short squeeze effect. Now a lot of money has been made by those in these plays as they've been blowing up over 100 percentage points in a single day. Now guys, I want to come on here, give you guys my 2 cents on what's going on, give you guys some updates that you should know, what history has told us and what we could potentially expect going forward, and if there's any opportunities out there. So guys, I've got a jam-packed one for you in this video, so do make sure you stick with your boy all the way through this one. Now let's jump into the first play. Up first is GameStop. Now before I continue, I want to congratulate all of those who jumped into this play and made some good money. Guys, that's what it's all about, making money in the stock market, capitalizing on the opportunities. Now you guys who jumped into this play early, you were bold, you were brave, you took a calculated risk and it's paid off well. And you guys know over here on this channel, when we hit success, we celebrate down in the comment section. So I want to hear from all of you. So the big update on this play is that they've been hit by restrictions on various brokers, from TD to Interactive Brokers to Trading 212, and what they've done is they've limited or completely paused the buying and selling activity of GME stock. Now this does have significant impacts on the future stock price, because for this stock price to continue rising, you're going to need people to continue buying. So this short squeeze activity that we're seeing in various plays isn't the first time this is happening in the stock market. It's happened historically before. So I'm just going to throw up on screen what happened to Volkswagen when they had their short squeeze in 2008. As you can see, that share price has come sharply back down to earth. Now I do think there's still some future merit in GameStop as a business going forward, but to carry a $200, $300 price tag is very lofty and it brings it away from its fair valuation significantly. So even in aftermarket, we could see that this stock is coming down. It's around 25% negative at the time of recording. So if you are in this play and you're still hanging in, guys, you do want to start to consider taking profits from this play, because when there is a sell-off, it could happen very, very sharply. And I don't want you guys missing out on the profits that you've already banked in. Next up, we have Nokia, another highly requested play by you guys. Now that stock price hasn't been driven up as much as GameStop and they've not been hit for the same restrictions as GameStop. That's why a lot of people are banking on this one to rise tomorrow. I'm going to let you guys know they're down around 10% in pre-market at the time of recording. And if you're in this play and you see significant downwards movement, guys, it might be difficult for the buyers to drive that price back up. So you might want to consider taking early profits on this one. You have to approach this one with caution. I want to put on your radar the SEC. They are in talks with the regulators and they are monitoring these plays that have been exploded due to the short squeeze. Now something for you guys to consider is you might just start seeing the same restrictions imposed on GameStop on plays like Nokia as well. So again, another reason why if you're in the green on this one, it might be worth just taking profits and moving to the next play. Next up, we have AMC, another high flyer today. They're up over 300% on the day. Now in aftermarket hours, they're down around 25%, similar magnitude to what we're seeing with GameStop. I want to let you guys know that these stocks, they cannot rise forever. It's technically impossible, because as that share price increases, the demand on the new buyers gets higher and higher. So they've got to come down at some point. That being said, whether you invested on Monday or whether you invested yesterday, I want to make sure you guys do whatever it is you can to come out the other side profitable on these plays. Alright guys, been rocking with the channel. You know what time it is now. This comes from Kieran. He says, how do you know when to sell out of a play? I've got good returns on fuel cell, but not sure when to actually sell. New to all of this, been following you and your plays. So thanks for sending this in. I like to think of selling out of stocks as an art, because when it comes to making money in the stock market, you need to do two things right. That's buy the stock at the right time and sell at the right time. Now, first things first, you need to decide what type of investor you are. Are you a buy and hold investor, where you buy that stock, you wait through the fluctuations, through the volatility, and sell at a later date? Or are you more of an active investor, where you make more high frequency investments? Now the selling strategies differ for those two types of investors. So let's cover the buy and hold first. If you're the buy and hold type and you believe in that company long term, even if you've made fantastic returns already, that company's run up 100%, 200%, you're going to hold that firm. And the way you're going to maximize your return is you're going to catch the dip in that stock. When that stock comes down, you reinvest, and that's how you're going to maximize your returns. I'm going to give you a play for me that fits that strategy, and that is NEO. Even though I do know that stock price quite well and I could predict the volatility in its movements, and I would make more money if I was more of an active investor in that play, I just like to have NEO as a buy and hold investment. Now, if you're a buy and hold investor and you don't believe in that company long term, or if you're an active investor and that company's run up, this is what you do. You consider a couple of things. The first being the valuation of the company after the run up. And I always tell you guys, look at that market cap to sales. That'll tell you how expensive or cheap that stock is relative to the rest of the industry. I'm going to give you guys an example. Back in November, when NOKIA ran up to $55, its market cap to sales was well over 30 times. This was looking like a very lofty valuation. Now, if I was an active trader or active investor, I would have sold out at that point, because it's likely that that stock is going to come down more in line towards its fair valuation. And that's exactly what it did. That stock came down from 55 right down to low 40s. So a good point would have been to sell out at 55 when you recognized that the stock price was looking expensive. Another one for you guys is look out for the catalyst that has pushed that stock price up and what the nature of it is. You guys know I always say split that catalyst into two types. Factual catalyst, that is something like its revenues has achieved a certain number, and speculative catalyst, that company is going to do something in the future. I'm going to give you guys another example. If we look at cloud commerce, when they came out and announced that they're going to introduce AI technology into their Swarm solution, we saw that stock price shoot up on the day massively. But guys, that fell into the speculative catalyst bucket. So what you could have done is recognize right there and then that if it's a speculative catalyst, it's likely that stock price is going to come back down. You're going to get that sell-off because they haven't achieved it yet. They've just announced that they're going to do something. Now, if it's more factual, the company has achieved this revenue number, then it's more likely that stock price is going to stay there. So if we take an example, if you look at NOKIA came out and delivered 7,000 vehicles in December delivery numbers. So that stock price went above its resistance line of 50 and has settled above 50. So it's unlikely you're going to see that stock price come back down. Now, the third thing I want you guys to look out for is the velocity of the run up. Now, if you see that stock make an unusual jump in its stock price in a given day, so if normally that stock can rise 5%, 10% in a day, and all of a sudden that stock rises 50 to 75% in a day, you might want to consider selling out of that stock if you don't believe in them long term, or if you're an active investor. Because what will happen is a lot of traders will recognize that it's jumped up abnormally and there will be a sell-off in that stock. So to maximize your returns, you want to sell once you've recognized that this is an abnormal increase in that stock price. Now, I always say when you see a stock run up 20 to 30% in the short term, just start to consider taking profits. That doesn't mean you take profits. It just means you have it on your mind. You start looking at the reason why that stock has run up and then strategize and plan when you're going to take those profits. So as I always say, thanks for tuning in. Do hit that like button for me. It really helps the channel out. And if you're new, do join the family by hitting that subscribe button. Also, check out the link down below to the Patreon, where you'll get access to the Discord, where I spend a large portion of the day talking to the community and answering questions. Now guys, Tesla's come out with their numbers. So before market hours, I'm going to try and deliver you guys a video so you guys have got the strategy set and ready for that play. Guys, it's looking like an entry point, a buy zone is coming, emerging soon. So it's almost time for us to pounce on that one. So as I always say, check into the channel each and every day. The stock market is rapidly moving. You never want to miss a beat. And I'll catch you guys in the next one.